Cramer. Welcome to Mad Money. Welcome to Cramerica. Let's be my friends. I'm just trying to help you make a little bit of money. My job is not just entertaining, but I'm trying to teach you a little bit here. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. You know what's fueling this market? It's the skeptics. That's what. I think the professional money managers are concerned about how far the markets run and the consistent gains we're experiencing, including today, where the Dow gained 239 points, S&P advanced 0.01%, and NASDAQ dipped 0.28%. But the amateurs, the home gamers drawn to individual stocks now, keep powering this strong move higher. And as we get closer to the end of the year, the pros start to throw in the towel and do some buying just to prove to their shareholders that they didn't miss out on the market's biggest winners. Those investors want to make some money, too. I think that's what's happening right now. Could be early, but it does feel like there is a lot of fear of missing out, doesn't there? Today, nearly everything went higher, including crypto, gold. Pretty much every asset class that the professionals see is overvalued. It's very easy to denigrate this market if you're a pro. That's because the pros see bubbles everywhere. Data centers, uranium from nuclear reactors, the power, of course, of data centers, and quantum computing, which really burst higher today in spectacular fashion. I mean, those stocks have just gone ballistic. The professionals want to see this speculative stuff cool down, including the data center stocks. They want those lower, too. They see these stocks as pathetically overvalued, but they can't force them to go lower, and they're afraid to short them. It's like a fait accompli. I think we're benefiting from a window that happens right about now on the calendar, with no earnings of any consequence in sight, and lots of momentum coming from individual investors again, who are drawn to the companies that help them trade. I mean, just look at Robinhood, Coinbase leading the charge. Now, with that in mind, what's the game plan for next week? Well, first, the president's been real quiet about stocks lately since the deal with Fiserv. It makes it look like the drug companies won't get hurt too badly by the president's plan to roll back drug prices. The gains in Big Pharma have been outstanding, and they continue today. I'd like to see a deal with at least one more drug company after this rally. So far, we haven't gotten another one, but look for that to happen next week. I get antsy when the president says nothing about business because that usually doesn't last for more than a couple days. Monday, Constellation Brands, STZ, reports the company has fallen out of grace along with the rest of the alcohol plays. CEO Bill Newland's acknowledging on the last earnings call that the company is being impacted by ICE raids in popular shopping destinations. The decline in volumes has matched the decline in the stock. Constellation has been trying to bounce of late. At 12 times earnings, it's the cheapest I've ever seen it. But the multiple contraction seems justified given the company's recent track record, as well as the rise of GLP-1s, which reduce craving for everything, including alcohol. Tuesday, we have our monthly meeting for the CNBC Investing Club with a very special guest. More about that on Monday. Then we get results from the always reliable McCormick. Problem is, though, the reliability hasn't been enough to move the needle for this stock. The spice maker still has a premium multiple at a time when the packaged food group has fallen totally out of favor in this market. Let's put it this way. If any food company can do well in a slowdown, it's McCormick, because spices are excellent trade-down material. The stock's down nearly 10% for the year and well off its highs, so it has a fair chance to bounce, but I just don't trust the whole group. Earlier this week, Conagra reported and it bounced a tad on an inline number, so there's some hope. But food's now a tough business. It's too hard for me. Now, Dell, this one isn't hard. They hold an analyst meeting on Tuesday, and I think it's going to be terrific. This company has been the leader in working with NVIDIA to integrate artificial intelligence. When I sat down with Michael Dell earlier this year, I was blown away by how much business he's doing in the space. Michael and his family office bought a huge amount of stock when Dell got clobbered earlier this year. It was a brilliant move. I think his analyst meeting will be the highlight of the week when it comes to things that can move stocks. Runner-up, though, will be what looks like a sleeper right now, Solstice, the Solstice analyst meeting. Solstice is Honeywell's advanced materials spinoff, which is now getting zero credit. Not the breakup that Honeywell's having will end up giving you a pure-play aerospace company, which this market craves, as well as a building automation company that has some of the best technology and yet is unheralded. And the Solstice is happening earlier. Now, I don't want to get ahead of myself, as the materials company might be an undiscovered gem, but Honeywell's making a pretty bold move here. You know, it's breaking up what former CEO Dave Cote put together when he was running the company. Now, I praise Dave in my new book, How to Make Money in Any Market, for his acumen at turning divisions around and constantly shuffling the portfolio to upgrade performance. I believe he'd be very happy, though, with this breakup by Vimal Kapur, the current CEO, although right now it's in limbo. because the big breakup between automation and aerospace is very far away, and no one wants to take a leap of faith. They won't get in now for what's going to happen more than a year from now. Now, we've gotten a couple of important earnings reports on Thursday, including PepsiCo and Delta in the morning. Now, recently, Elliott Management, a hard-charging and thoughtful activist fund, took a big stake in PepsiCo. They want changes. Will management go with Elliott, or is it going to fight Elliott? We'll probably find out when Pep reports. It's been a very tough time for shareholders of PepsiCo, but the stock now does yield 4%, and it has a very solid snack franchise in Frito-Lay. My concern, as usual, is with a younger generation that cares more about their health than their parents, and with the GLP-1 weight loss drugs that cut back craving, including cravings for Frito-Lay's big business, which is potato chips. I think CEO Raymond LaGuardia hasn't been able to deliver of late, with the stock down almost 7% for the year, while Coca-Cola is up 7%. Comparisons are odious, unless they're in the stock business. Delta's a tough stock to own. It's been among the best performers in the group, yet it's still down 5% for the year. I know the consumer is supposed to be weaker, but there's still an appetite for travel. I think it might work as a trade. But like I say in my book, these are the toughest stocks to own. So many things can go wrong. After the close, Levi Strauss reports, and this company's become very reliable despite tariffs. It hit a 52-week high today. That last quarter was extraordinary. I think another good one could be coming. Finally, on Friday, Austin Goolsbee talks. Now, why does this matter? It matters because he's a voting member of the Federal Open Market Committee. He spoke this morning on CNBC, our network, about an economy that might be too strong to cut rates. This rally's been built on the idea that more rate cuts are coming. Goolsbee's comments restrained the market in the morning, so look out. Because of the federal furloughs, we didn't get a labor report today. So everyone, including Goolsbee, flying blind. Here's the bottom line. We have a lot of anecdotal evidence of weakness, but not anything hardcore. We need to watch this as we're about to head into earnings season, and the bulls could run into serious trouble if the Fed doesn't take action. For my money, the economy away from the data center build-out is getting weaker. This is no time for indecision. The Fed needs to cut because too much of the economy away from this multi-trillion-dollar build-out just isn't going anywhere. Sam in Massachusetts. Sam.
Jim, first I got to say Yom Tov to those who celebrate. But anyway, my question...
Happy and healthy to you, sir. Okay.
Yes. My question tonight is on a company that many will be familiar for their Clover payment processing business. That's
sure.
Fiserv. The company is trading at $69 billion, and it looks undervalued given the $5.6 billion in quarterly revenue that they just did. Stock's trading at a 40% discount to where it was at the beginning of the year. And so I'm curious what you think about Fiserv based on the continued strength of the consumer despite headwinds with the overall.
Sam, I got to tell you, that was not a good last quarter, and it was shocking. I think you got to wait another quarter to see if you can get it together. That was just not that good a quarter. Nothing I can say about it other than that. Let's go to Elaine in California. Elaine.
Hi, Jim.
Elaine, how are you?
Pretty good. Thanks for taking my call. Congratulations on the book. I downloaded it today.
Oh, thank you very much. I'm glad you did that. I hope others do. I like it when people read. What's going on?
I had a question about ticker symbol HIMS. Do you think it's overvalued? Should I get out or should I buy more in the pullback?
It's what I call a football stock. I mean, there's just every day there's a short crushing it or a long bull in it. I think it's a very hard stock to own. So therefore, I say find an easier one. This one is too tough. Let's go to Kevin in California, please. Kevin.
Hey, booyah, Jim from Weed, California. How you doing?
I am doing well. How are you doing?
Real good. I've been watching for many years. First time, long time. How about those Eagles?
Oh, we look good. You know, we find a way to win. Let's hope against the tough Denver defense we do okay.
There you go. Speaking of Eagles, I'm talking about AEO, American Eagle Outfitters. I bought a bunch after Sidney Sweeney commercial debuted, and it took off. Now it seems to be pretty stagnant. Do I buy, sell, or hold? Thanks,
My
Jim.
instinct is to ring the register. Why? Because we had the event occurred, and now we're getting away from the event. And there are a lot of people who say, wait a second, the company isn't doing well away from that. I like to just see you get a bit of a win here, take some off the table. All right, we need to be on the lookout for more signs of economic weakness this week because the bulls could run into some trouble if the Fed doesn't take more action soon. Oh, man, Money Tonight, have you seen this run in SoFi? Soaring over 200% in the last year. I'm taking a closer look at the story to see if it has legs. Then DraftKings has found itself in the doghouse. So I'm covering what's ailing the stock. And if think today's move higher could be a sign of what's to come. Plus, I'm sizing up an under-the-radar rare earth play that you called in about and sharing where I come down on this speculative name. You've got to hear it. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.